Good afternoon, it's Brian Shannon from Alpha Trends Blogspot. Today's Wednesday, May 9th, 2007, and we're going to take a look at trading from today. It said that reactions to news and surprises tend to follow the direction of the trend, and that's clearly what we had again today. As the Federal Reserve Open Market Committee met and left monetary policy unchanged, the markets responded with gains. The Nasdaq 100, the Qs, finished with a gain of 10 cents, which is pretty impressive when you consider the fact that Cisco Systems and Electronic Arts, both components of that Nasdaq 100, got hit pretty hard based on earnings. So if it wasn't for those two, I think then we probably would have had even more significant gains in the Nasdaq 100. But as it stands, the Nasdaq did gain a 0.2% today, and made a new closing high for the last few years at least. So looking at the 10-minute time frame, you see the market gap down. Once again, we've got a rising 5-day moving average, so when the market gaps down like that, give the benefit of the doubt to the buyers. And sure enough, the buyers did come back. Resistance at the 42.75 or so level was taken out, and the market was able to break out. So it looks like the path of least resistance continues to be higher. The 46.40 level was tested 2 days ago, and they keep trying to shake people out on the opening here, but the buyers keep showing up, and this market just gets stronger. So now we should have some support at 46.75, and below that at about 46.40 continue to be the areas of support for this market. The spiders, S&P 500, this market also finished with gains, a little bit more in terms of percentage-wise than the Nasdaq 100. They finished with a gain of 54 cents, and that was a 0.36% movement in the Nasdaq 100. I'm sorry, the S&P 500. So you can see that the market did finish with, and very close to its highs. Looks like there's a bad print in there if we look at the intraday time frame. I don't think that this really occurred. I think there was probably an erroneous trade that went through and didn't get cleaned out of the data yet, but that will probably be resolved. The S&P 500, though, did push past this, what's been recent resistance right here at about 151.10. And again, we've got this rising 5-day moving average that was tested on the reaction to the Federal Reserve announcement. So the rising 5-day moving average is definitely something you want to continue to keep your eye on. It's been very good in this market, as have the the 10-day moving averages on the daily time frame. The big gains were in the semiconductors today. SMH broke past that level of resistance that we were looking at 37.60. I was kind of thinking that the market needed to catch its breath a little bit more in here, but I said above 37.60 is probably where the bullish momentum continues. And that's exactly what did happen today. And this market didn't look back at all. It was very impressive, the strength in there, and a lot of it had to do with the gains here in Texas Instruments. You can see that that stock gapped up and closed pretty near the highs of the day. So semiconductors continue to be in a fantastic uptrend, and what we were looking at was the height of this, which is about 3 points, added to the breakout point of 36. So a target for the semiconductors still remains at about $39 a share, and that's about where we had these highs from early 2006 as well. So that's not where you should sell, but it's just something, a rough indication of where this market has the potential to go to. Obviously, it could continue much higher than that as well, and we can readjust those price targets as needed. The IWM Russell 2000, this market was also up. Of the Nasdaq, the S&P 500, and the Russell was up the strongest. It was up 0.62%. So we saw in here that the little resistance level at 82.90 was taken out temporarily, but it closed right there as well. But it did make a higher high on an intraday basis, and pulled back a little bit from there, but very impressive anyways. Path of least resistance continues to be higher. No reason to doubt this strength. And let's take a look at the stocks that we had been in. I didn't post a video last night just because it was the Fed day, and I didn't want to give a bunch of instructions on stocks that could do basically anything. But we got involved in CMGI at 225 on Monday, and our stop had been at 232. Let's raise that up again. Let's raise it to $2.30. Well, let's say $2.34. So we're just going to raise it by 2 pennies, to $2.34, and hopefully this thing can really take off, and maybe we can extend those gains a little bit further. But for now, we'll lock in 9 cents if we get stopped out at that 234 level. Pier 1 imports we got involved in late day yesterday at $7.50 a share, and our stop in there was 738. Let's raise it up to $7.58 in Pier 1.